Hello, everyone. So this is Shilpi Thapar again with a very crucial topic related to the director series, internal audit and related party transaction RPTs, which is a key tools for the corporate governance. Now, board knowledge of internal audit and RPTs is very critical for strong corporate governance. Internal audit ensures effective risk management and compliance, while RPT oversightness. It prevents the conflict of interest, ensure transparency, and best interest of the stakeholders. Without this expertise, board risks exposing the organization to significant financial, legal, and reputational harm. So, to have an impactful discussion on this very crucial topic, we are honored to have with us a distinguished and eminent professional, Kamal Garg sir, with his extensive expertise in accounting, auditing, corporate governance, and insolvency. He will shed some light and share valuable insights on this critical topic. Welcome, sir. Welcome to my podcast. I'm really honored that you accepted the invitation, from your busy schedule, and and agreed to share your valuable insight on such a crucial topic. I think which is very material for the board to have a knowledge on. Thank you so much, sir. Just trying to introduce him. So, sir is a very reputed and eminent chartered accountant. And he is a certified expert in multiple disciplines, has prolific contribution as an author, thought leader, and subject matter expert, and is being an establishing and leading figure in accounting, auditing, and corporate governance with a legacy that spans academia, industry, and professional advocacy. Just a key contribution and achievements to share with you. He served as a member of the accounting standard boards for multiple terms and financial reporting review group with ICAI. Contributed significantly to the Ind AS IFRS Implementation Committee and Peer Review Board of ICAI. Special invitee to ICAI committees on banking, insurance, and pension, and actively engaged with the ethical standard boards and sustainability reporting standards board. Nominating as a member of the expert panel for addressing statutory audit queries with the auditing and assure standard boards. Sir has also delivered expert sessions on IFRS for the National Board of Accountants and Auditors, Tanzania. Conducted specialized training in insolvency and bankruptcy laws for CBI inspectors, contributed to the key research projects for the Indian Institute of Insolvency Professional under IBI. And the most important, he's a prolific author. He has authored over 25 authoritative books and commentaries with widely acclaimed work published by leading publishers such as Walter Kluwer and Bharat Law House. Some of the notable titles I'll just like to mention here: IFRS and Ind AS Concepts and Application, Audit Trail, a Practical Guide, Concise Commentary on Companies Act, Standards on Auditing, a Practitioner Guide, Concise Commentary on Insolvency and Bankruptcy Code 2016, NFRA Law and Practice, Handbook on Internal Audit, Understanding Goods and Service Tax, Guide to Tax Audit, CARO 2016 and 20. Excellent, sir. What an impressive profile. And most of the books are integral part of my library too, sir. Me and my staff, if you want to guide clients, on accounting standards and RBT, we refer to your books, sir. Excellent, sir. Thank you so much once again, sir, honoring us and coming over the show. Thank you so much, sir. So, sir, just to start off, how does internal audit help board to make sure that companies' risks are properly managed and controls are strong?
Thank you very much, ma'am, for inviting me to this program. I'm really glad to be here with you. As far as your first question goes, how internal audit helps the boards in managing the risk and strengthening the controls? I would say it's very crucial to understand from the very beginning how the board and internal controls are connected to each other. We must come to the limelight of a section. We have section number 134, subsection 5 of Companies Act. In section number 134, subsection 5 of Companies Act, we have clause number E. This says that the board of the listed companies have to take the responsibility towards the internal financial control. The whole genesis starts from that place. Now, when we say internal controls must be strengthened, then we need to have a mechanism to check out whether internal controls are working uprightly or not. And here comes the role of internal audit or internal auditors. To put this in a different way, we may recall that SEBI LODR is also there. Now, in SEBI listing obligations and disclosure requirements, from 1st April 2023, if my memory serves me right, we have regulation number 21ZC, item number 2nd. Now, what it is saying, I'm saying some words, RPT or related party transaction. So this transaction means a transaction involving transfer of resources, services, or obligations between listed entity or any of its subsidiaries on one hand. I emphasize listed entity or any of its subsidiary on one hand and any other person or entity on other hand.
Right.
The purpose and effect of which is to benefit a related party of listed entity or any of its subsidiaries with effect from, as I told you, 1st April 2023. Now, there is something very crucial. Let us take a situation or a kind of analogy with an example. Suppose that Kamal and Shilpi ma'am both are party related. Kamal enters into a transaction with Mr. X, which is my party unrelated. But the ultimate benefit of this transaction with Mr. X is going to Shilpi ma'am. Now, this is what is covered by LODR. The words are purpose and effect of which is to benefit the party related. And here comes the role of internal auditors again, because the expansion of definition is very stringent. If I put it in more calculative way, I must say internal audit plays a very crucial role to ensure that organizations or companies' risk management processes are effective and the controls are robust.
Right.
How it can be ensured? By identifying weaknesses, by recommending improvements, and more importantly, and helping in mitigation of risk. Let me give you some more examples besides the SEBI LODR. One of the very critical risks is cybersecurity risk.
Right.
Now, internal audit can help it out. How? The internal audit team may find that employees use weak passwords. It may find out the increase in risk of data breaches. So thereby, the internal audit can recommend implementing multi-factor authentication and regular security training for the employees. So this is a kind of internal audit lookout.
Right.
I can give you one more example. Fraud risk management. So, for example, in one of my internal audit assignment, what we found, the internal audit team detected an unusually high volume of manual payments being made to the same supplier. So, when this kind of threat was identified, we have to suggest strengthening approval processes and implementing automated controls to reduce the risk of fraudulent payments. And all these things are nothing but a kind of, helpful tools to the board. You can say like internal auditors strengthen the board rather than questioning the board.
Questioning the board, right.
Internal audit fixes the accountability. So people generally do see internal audit as one kind of cost factor. I must say, it is not only the cost factor, it is also the helping factor. So I would say this answer from my side that yes, internal audit offers several advantages to the board.
Yeah, so it is not a regulatory compliance, sir. It is one of the strategy for a long-term growth of an organization. I completely agree with you. Sir, what risk, particular in this financial and operational areas, what risk the board should focus on? What kind of risk you would suggest the board to focus on?
The major risk is procurement risk.
Okay.
So when companies are working and they procure the goods or materials or services for that matter, but we have to see whether any procurement risk is there or not. Now, procurement risk can take many shapes. It could be the procurement from parties which are related.
Right.
It could be the procurement for the parties who are seemingly unrelated, but at the backlog they are related.
Right.
It's a kind of backdoor entry.
Right.
Third thing is, what I have seen is procurement risk comes up with many other challenges.
Right.
Generally, people say it is only RPT. Even in companies that there is a provision that RPT, if they're taking at arm's length pricing,
yes, arm's length,
they need not have the audit committee approval. In my personal experience, what I found, the board resolutions are passed by saying that the transactions are at ALP, arm's length pricing, but there is no study.
No study.
How this price at ALP?
That's a common issue, sir.
Very common issue. Audit committees are vested with the authority as well as the responsibility to vouch whether the RPTs are proper or not, but there is no review report. This is another kind of a risk. What is the risk here? The risk is a kind of a green flag. Now, what is the meaning of green flag? The green flag means things are appearing proper, but things are not proper. Many a times what happens, for example, there can be two friends who are closely connected, very closely connected, like Jan Viru of Sholay. But they are not relative or they are not party related under the regulations. Generally, these factors are not captured.
Not captured, right.
And for that very matter, if I say like this, if Shilpi ma'am and me are good friends, we can take the advantage of ours not being into party related definition, and we can enter into a transaction which can have the same purpose and effect as an RPT could have. So this is a kind of risk which generally boards are oblivious about, or they are cognizant, but they are deliberately ignoring it.
Right. Or
and here comes the role of internal audit.
Yes, a proper guidance is required, how to overcome this kind of challenges. And I think it's very important, sir. It's RPT knowledge is non-negotiable for any board. True, sir.
So I always do say there are two kinds of RPTs. One is related party. Second is party made related.
Party made related, yes. Mostly
Like
mostly fall in second category.
My friend will fall into second category.
Yes, second category. Yes. True, sir. So, sir, what role does internal audit play in tracking RPTs and why it is important for good corporate governance?
I would club this answer into 3 points. What is the role of internal audit? Role number 1 is that internal audit can be helpful in monitoring the conflict of interest. Like one example I already covered. I can give you one more example. There was a company whose CEO was leasing the company's building to their own friends and relatives. Internal audit can evaluate whether these lease terms and conditions are at arm's length or not, are at market fair practices or not. So first one is monitoring the conflict of interest. Now, when we say conflict of interest, we must, as professionals at least, understand that conflict of interest is not merely with relatives or party related. It can come up with the acquaintances and friends also.
Yes.
In the shape of kickbacks, in the shape of some corrupted practices, it can again come up. So conflict of interest can be well monitored by, or can be well tracked by internal auditors. The second thing is approval processes. So whenever RPT is taking place or whenever any big deal is taking place, we need to have prior approval of the board or shareholders, or maybe in some cases audit committees. I have seen in real practice that generally these approval processes are bypassed, especially in family-owned companies, which are big companies.
Yes.
Now let us take an example to understand this thing. Suppose that in audit committee, there are 3 directors. The 3 directors are also the part of risk management committee. These 3 directors are also the part of procurement committee. Now, where is the, independence?
Independence, exactly.
Simply by saying that I am an independent director, I am going to vouch my own work from different committee. True. Like, for example, we have a nomination and remuneration committee. Now, let us take a situation. Shilpi ma'am is a member in nomination and remuneration committee.
Yes.
She is also a member in audit committee. Both committees are there. Audit committee reviews the work of NRC. In a way, Shilpi ma'am is reviewing her own work, which she did in NRC. So ultimately, independent directorship remained as independent only on papers. That yes, I am independent director, but in whole substance,
yes,
that independence is not because of self-review threat. Here comes the role of internal auditor, because internal auditor can question this kind of approval process. Like you were there in 2 committees, how you have ensured that there was no self-interest threat or self-review threat. This can be through internal audit. Third point I would highlight is disclosure compliances. I have seen of late that whenever there is a kind of RPT or whenever there is a kind of self-review or self-interest threat, disclosures are not proper. Let me ask you a question, and I would be glad to have the answer. When we say disclosure, disclosures are not only under Companies Act or LODR. Disclosures are there by virtue of applicable financial reporting standards also.
Right.
As of now, in listed companies, Ind AS are applicable. So let me ask you a very small question. I would be glad to have this answer. A listed company paid sitting fees to independent director. Now question is, how this payment being made to independent director on account of sitting fees will be disclosed in profit and loss statement, legal and professional charges, or employee benefits, or maybe any other head for that matter.
Right.
Now, what I have seen, most of the companies are disclosing this sitting fees as legal and professional charges. But the correct answer is, it must be disclosed as employee benefits.
Exactly.
So audience may take a note. We have Ind AS 19, 19 employee benefits. And under Ind AS 19 employee benefits, independent director is also considered as party related. Whereas if you go to Companies Act, independent directors are not deemed as
Not
related.
related party. There's a conflict, sir.
And that's
Yes.
the difference.
Yes.
That's the difference we have to be very careful about.
Right. Excellent insight.
Second point what I must highlight is, normally what is happening, I have seen many annual reports on corporates where I visit, there is a practice. A transaction with RPT took place, say, in the month of June. It was settled and squared off, say, in the month of November. This transaction people are not disclosing in financial statements. Why? Because they say these things are settled, the things are squared off. Please understand, even if these things are settled or squared off, they still need to be reflected in the notes to account.
True, sir. And this is
a very good example.
Yes.
A very good example is CSR contribution made by a company to its own subsidiary company or its own trust or society. For example, hypothetical example, just to make things clear, we have Wipro Limited. Wipro Limited is having its own section at subsidiary Ajim Premji Foundation. Now, Wipro Limited contributed CSR via its Ajim Premji Foundation. Now the question arises whether this is RPT or not. Answer is yes.
Yes.
It is RPT. So here, what we need to understand, especially the board members need to understand, that here not only CSR committee approval is required, but also audit committee approval is required.
Right.
Because it's a transaction between two parties who are related.
Yes. True.
And more importantly, what we need to understand, this also needs to be disclosed in financial statements as RPT.
Yes. Excellent.
So this is the thing which internal audit can highlight.
Excellent insight, sir. Sir, one another question, which even we face, like how to determine this arm's length price, like auditor certificate would suffice, or like, what are the mechanisms?
More than certificate, more than certificate, a study is required. For example, let us take a very childish example to make the things clear. Suppose that you wish to sell your car, and you wish to sell your car to me. I said, Shilpi ma'am, I will pay you only rupees 10 lakhs.
Right.
Whether you will be happy with this 10 lakh offer? Answer is no. What you will do? You will visit some portal, like for example, cardekho.com, and you will find out what is the price that portal is offering. So what you are doing? You're getting to the market price.
Right.
So this could be a benchmark setting. So there are several such kind of procedures. And for this matter, the thing is, we have ICSI publication on guidance note for RPT. They have given several such mechanisms.
Right.
We have OECD, Organization for Economic Cooperation and Development publications, who have told us how to compute or how to arrive at ALP.
Right.
So what we need to understand, this study is required.
Exactly.
This study needs to be certified by professional, maybe a company secretary, maybe a chartered accountant, maybe a cost accountant, whatsoever. But normally this study is not there.
Right. So whose job is this to study this and, arrive to this arm's length price? It's a CFO job or it's an internal auditor job?
The audit committee
delegated by the board.
Audit committee needs to approve the RPT. And board also need to review along with audit committee these RPT. So the audit committee should always question where is the study, and hence this study is the prerogative. No, it's not prerogative. It's a kind of a mandatory requirement as a matter of corporate governance standards. So ultimately, but who will do this? Maybe director of finance or CFO.
Right.
So director of finance or CFO will engage the appropriate consultants or people to have this study carried out. This study will be submitted before the audit committee, and then it will go to the board.
Right. Excellent tips, sir. Sir, we move to the next question. What are the red flags or warning signs in the internal audit report, which related to this related party transaction, which board should watch for?
The biggest red flag is lack of documentation. Normally, the transactions are taking place with RPTs without proper documentation. When I say documentation, I am not saying only the board resolutions or audit committee resolution. Like I took an example, there is no ALP report. There is no ALP study. So it's a lack of documentation. Second is, whenever transactions are taking place, one of the requirement is justification. What is the justification? That justification is also not documented.
Not monetized.
So this is the red flag.
Yes.
The third red flag is that high volume of transactions are taking place with a single party which is related without any clear business vision. So all these are the common red flags. Other red flag which I must highlight, which I already said in my initial words, parties who are not related as per the law, but who are related by virtue of a commercial substance. This is another red flag. So this way we have to ponder over. Let me give you a more instance out of my own practical experience. So we may recollect that in companies that we have section number 197, section number 198, which deals with the managerial remuneration.
Right.
So what happened, ma'am, the company was a loss-making company, and the company borrowed from the banks so that it can sustain the operational and other requirements. Now, in companies that we have schedule number 5 also. Schedule number 5 allows you to pay remuneration even if the company is making losses on the basis of effective capital employed.
Right.
Now, what happened? Company is making losses, company has borrowings, but on the basis of effective capital employed, all of a sudden, the director's remuneration was increased. So up till last year, the directors are withdrawing rupees X. Now they have started withdrawing X plus Y. So this is a red flag.
Right.
That your company is making losses, still you are paying high remuneration.
Yes.
So what is the reason behind it? So this is another kind of area where internal auditors can come in.
Right.
Other red flag is company is making losses. The company now requires minimum CSR contribution of 2%. But what company did? Companies into losses, borrowed money from the banks, and they contributed towards CSR an amount which is higher than 2%. And the party was also unrelated, but party was acquaintance.
Yes.
Another red flag. So these kind of things, like I said, justification, commercial justification, that is the thing which I must say internal auditors can highlight.
Internal auditor and company secretaries also play an important part in monetizing it. Excellent tips, sir. Excellent tips. I think it's so important, and the board should have knowledge of all these things, which is, I think, lacking on many boards. Excellent, sir. Sir, thank you so much for shedding light on such a critical aspects of internal audit and related party transactions. Your insight reinforced the importance of transparency and compliance in protecting organization integrity. For our listeners, let's remember effective internal audit and vigilant RPTs oversight are foundation for any strong corporate governance. And a board must prioritize robust internal audits, review their RPT policies, regularly, and vigilance to potential conflicts to uphold the integrity and shareholder trust, sir. As rightly said, this is not a strong governance in these areas is not only a regulatory compliances, but it is a strategy for a long-term success of any organization, sir. So thank you so much. And I think this subject is so diverse, and, we will disturb you again, for discussing the various aspects, especially on RPTs, which is, I think, a very important aspect of corporate governance, sir. Thank you so much, sir, for joining us. And thank you, our listeners, for tuning in. And we look forward for many more, topics for discussion related to corporate governance. Thank you so much.